What's up, traders? Welcome to today's recap. So, pretty much a break-even day for me, guys. We took one trade today. We had lost about $20, and we manually exited this trade. I'm going to show you guys what the trade was and why we exited this trade. So overall, my bias this morning was this London highs. I was looking for shorts at this London highs, taking out all of these intermediate lows underneath us. We had stacked liquidity, stacked equal lows here. We also had a previous day high up here, which I was looking for my next area to short this market. Also, just going into the charts a little bit, we had a new week opening gap. So I thought that could also pull us lower, but as you can see, we've been going higher. So getting into where the market opened right here. See, market opens right here. Boom, we're already taking out London highs. We tried to give a quick confirmation here, but I was looking for all of these gaps to get invalidated, and the market did not do that. So once I seen this wick, I kind of already knew after this candle that we were going to go higher towards this previous day high, which is sitting all the way up here, right? We just have a high sitting up here, that daily high up there. So once we got into that daily high, and then we have another daily high here, which is probably where we'll reverse from, but we'll see. Once we got into this high right here, this is essentially the first area where I was looking for a potential source to take us back and take out these intermediate lows, since our next liquidity point was a long ways away. Now, here's the trade that we actually executed this morning. So after taking out this high right here, you can see we have a nice violent candle towards the upside. Then we see we have that wick and this next candle here giving us this nice 5-minute inversion. So at first, once we execute this trade, this looks very clean to execute this trade. 5 minutes stop loss was above this high up here. Let me just show you guys. Stop loss was above that high right there. All right. So this was initially the trade from the beginning right here, right? This is where we executed this trade. That was our stop up there, and we're going to target down here near this low for about a 1 to 2, not necessarily the low, but just about a 1 to 2, right? So as this trade was playing out, right, we got close to our stop loss, which also forgot to mention, we do have an SMT up here as well. As you guys can see, we have right here this 953, and then we go to NQ, we see 953. So we do have an SMT up here as well. Now, as this market was playing out right here, we confirmed a 15-minute. All right, so this 15-minute now became what I was looking at discretionarily. So I was watching to see how this market was respecting this 15-minute, and my first concern was this wick right here. Boom, tapping into that 15-minute after we barely missed our stop loss, and now we're creating low resistance liquidity. So already have a concern there. So I'm watching this trade, letting the trade play out, seeing that we're still getting some bearish candles here. But the main thing I didn't like about this was the low resistance liquidity being built, and that the displacement that we seen earlier kind of just fell apart, right? After seeing that 5-minute inversion, we kind of expected the market to just continue that bearish momentum off of that high, right? So since I wasn't seeing that, I was being more like skeptical of this trade as we were forming this low resistance liquidity. So I let it play out a little bit longer, giving it a chance. And then I seen this right here, this last manipulation. Then we got this inversion. So I got out of the trade over here after this last manipulation. So essentially we have this wick now, and then we have that wick underneath this. And once we get this inversion right here, this is basically like a continuation move that you could take towards the high. And once I recognized that, I manually exited this trade. We have low resistance liquidity. We are tapping into a 15-minute SIBI. Like, we're respecting it. We're wicking inside of it. And we have now we're getting this inversion right here. So that's what made me get out of this trade. Yeah. So that's why we got out of this trade. That's why we exited this trade. And you guys can see that this would have ended up being a losing trade. And it's because of this low resistance liquidity, no displacement off of this trade. Since I seen that and that we had the 15-minute right there, I automatically knew that most likely we're going to continue towards the upside. So that's why I was able to discretionarily get out of this trade. And that was pretty much the price action today. I didn't take this long. I don't take continuation trades. So didn't look for the long, essentially. And that was the only trade that I executed of the day. So you guys can see right here, that was the short. And then I got out on this candle right here that came back towards the upside. So that was my trade this morning. Pretty chill markets for now. I'm gonna kind of wait. We might make all-time highs later on this week. I know we're all the way near this next high right here. So I'm gonna wait and see how tomorrow plays out. We do have FOMC this week, so gotta be careful on that. Be cautious this week as we do get towards FOMC. Price might be a little bit more choppy as we get closer, so be careful tomorrow. And also remember, on Friday we have a bank holiday, so we won't be trading on Wednesday for FOMC, and we won't be trading on Friday. All right, so that's pretty much it, guys. Just be careful, preserve your capital, take the A+ setups, and be patient. Okay. That is going to be the end of my recap. Let me know if you guys have any questions or concerns. I will see you guys in the next one. Peace out.